Austin, very good to see you. I love it when we can get back to basics. Today, we're going to talk through what is provisional income because understanding provisional income is key to understanding how your Social Security will be taxed. And a little bit of planning now can go a long way in saving you a lot of money down the road. So let's start at the top. What is provisional income and why is it important?
Yeah, so the IRS came up with this fancy little term called provisional income formula. Essentially, what provisional income is it's a calculation to determine how much, if any at all, of your Social Security benefits will be subject to federal tax. So
Mhm.
that is really, in a nutshell, what the provisional income is. And it's important because that could have very big ramifications tax-wise for a couple in retirement who's collecting Social Security benefits.
Right. So let's dive a little bit more into that because I think a lot of people are surprised to learn that Social Security is taxed. What percentage is taxed and how does that relate to provisional income?
Yeah, so the provisional income formula, as you can see here, whether it's single or married filing jointly, has different thresholds that may increase the taxation on your Social Security benefits. So essentially, the main thing to take away here is these numbers are fairly low for
Yeah.
married filing jointly. If your modified adjusted gross income and provisional income is over 44,000, then up to 85% of your Social Security benefit will be subject to federal tax. And that has not, I will add, has not been indexed for inflation in quite some time. So these thresholds, again, that's why they feel so low in today's dollars because they've remained the same for years and years.
Yeah, absolutely. Really, it's surprisingly low. All right. So what makes up your provisional income?
Yeah, the easiest way to think about your provisional income and kind of what is included in that calculation is it's your adjusted gross income. So think your total income plus any tax-free interest, so like municipal bond interest income, and one half of your Social Security benefits. So everything you see on the screen there, again, it's the AGI plus tax-free interest income, and then, of course, one half of your Social Security. And if that figure is over that 44,000, right, that total number is over that 44,000 and you're married filing jointly, you will have tax on up to 85% of your Social Security benefits.
Right. And I bet that adds up quickly. So let's talk about traditional 401ks and IRAs because these make up your greatest tax liability. Explain how distributions, though, from Roth accounts don't affect your provisional income.
Yeah, so the Roth accounts are really a great tool and can lead to tons of tax savings on your Social Security benefits. So when we distribute from a Roth IRA, right, we've already paid taxes on that type of money. So it is not included in your taxable income or adjusted gross income, right? When we have a distribution from a Roth IRA, therefore, it can greatly reduce the potential taxation we experience on Social Security. Whereas when we pull from any tax deferred account, whether that's a 401k or traditional IRA, right, it is fully taxable in the year we distribute from those types of accounts, increasing and potentially pushing us over, right, that provisional income formula, leading to up to 85% of that benefit amount being subject to federal tax.
Mhm. And just to clarify, even after the passage of the big, beautiful bill, Social Security will still be taxed for most people. Can you explain that?
Yeah, I think this was a kind of area of the bill that led to a lot of confusion for
Yeah.
many folks. Really, the reality is it's an extra $6,000 deduction per person that is allowed up to certain income thresholds. Where if you're married filing jointly and you're above 250,000 of adjusted gross income, then that $6,000 deduction goes away. So it's not that Social Security will not be taxed at all. It certainly will be for many folks. But the reality is it is an extra added deduction that can kind of help lower that taxable income
Mhm.
threshold.
Yeah, there's so much to consider when it comes to Social Security and claiming strategies, but proactive planning, again, is key to lowering your taxes and what you'll pay in taxes and Social Security in the future. So, Austin, if somebody would like to sit down with you, learn more about that strategic tax planning, what's the best way to reach you?
Yeah, you can give us a call at 919-322-4113, or send us an email at info@patriotwealthnc.com.
Okay. Austin, thank you.
Thanks, Aaron.